Good morning, everyone. Today is the 13th of November. This is Brad Matheny. We are looking at a 1 hour SPY chart, and let's start off over here with my SPY cycle patterns. We are looking at a consolidation pattern in counter trend mode. Now, we have moved into bearish trending, which aligns with the bearish biasing daily and weekly over here. We're still in explosive trending, which is that low volatility market movement. There's a lot of cash that's played back into the market here, guys. But again, we're getting that very big volatility, and we move into a temporary bottom and then a gap reversal into Friday, counter trend gap reversal. Then we move into that up, down, up, which is in counter trend, which should be a down, up, down. Now remember, nothing trades on Saturday. A little bit of up maybe on Sunday, and then a big down bar potentially on Monday. Then a top resistance, then a flat down, then a Harami line, then a temporary bottom again on Friday. Then we get into carryover, inside breakaway, and then counter trend rally and a trend rally mode. So now, as I've mentioned to you, I've highlighted where I think the markets are going to go. And remember, this is really my interpretation of my data, the SPY cycle patterns, trying to explain to you where we're looking for opportunity. Now, I had highlighted these: buy here, sell here, buy off a dip here, sell up here. And now we're looking for a buy down here on approximately Friday or Monday. That would be the 15th or the 18th. So we're looking at a downward trend here. I've drawn it many times over here, but I'll just clear that, clear that, clear that. And really what we're looking at here, guys, is a bit of a downturn. Okay, I think I wanted to keep one of those blue lines, so I'll put it back, drag it up here a little bit. So what we're looking at is a bit of a downturn. Let me spread this out and drag this over. So remember, we're moving into that kind of a topping pattern, and the way I can explain it to you is from a longer term perspective. We have essentially, I'm going to draw this, I guess, and show you, but we had the rally up into here, leading to the double topping sell hedge down here, into the buy hedge, rallying up here, into the sell hedge or the sell pattern, into the lower channel, into the upper channel, and then down into the basing of the anomaly pattern back over here. So again, try to draw it a little cleaner. Let's make this a bright color so we can see it. Okay, we'll make it a bright orange, and we do it again. So here's our rally, as you can see, up into the topping pattern, rolling across the top, into the sell hedge, down here to the low, into the buy hedge, up here, into the sell hedge, rolling into a buy mode, rolling into a sell mode, and then rolling into potentially this buy zone before we roll out of the market trend. So you can see how I had already kind of predicted this top pattern rolling across this early topping right here in October 22nd, 23rd, 24th, rolling downward into the election low, which played out perfectly. I did have a buy hedge, one of these back over here prior to the election. I must have got rid of it. Must have got rid of it by mistake. So let me see if I can drag. Yep, okay. One of these were down here. There it is right there, just in a different color. And there's a buy here mode right after the election. And now we're looking at this sell here. So on a broader context, you really want to kind of follow this line. I might try to make it as bright as I can so you can see it. I don't know, maybe a light blue. It's about as light as I can make it, or maybe I'll make it a dark green. There you go. That stands out a bit. So this is the general rotation of trend, and this is what the patterns were suggesting as well when I interpreted them, that we were going to go to rally phase, and granted, it never went up to where I thought. This was me drawing what I thought price would do. It rolled sideways, but it did roll into a topping pattern right here, just like I predicted. It rolled into a low right here, just like I predicted. It rolled into a topping pattern right here, just like I predicted. It rolled into a low down right before the election, just like I predicted. It rolled into a rally phase after the election, just like I predicted. And now we're rolling into this sideways channeling. I believe that we're going to move after this peaking here around the 19th, 20th. I believe we're going to move into a fairly solid consolidation range down into this area. And I think traders need to be aware that, we are moving into what I would consider flagging. So you have to remember we have these flags setting up here. So I'll try to make this light yellow, try to make this light yellow. And if I were to eliminate this line and draw again this mode up, down, up, down. This is the same cycle I showed you guys earlier, but now I want you to realize once we get up into this double topping pattern here, now we're looking for this formation of this flag. So understand that we have this flag here, which is a little off. I mean, we could try to draw it a little higher, but I'm going to leave it where it is right now. We are likely going to be moving into this upper zone, down 1, 2, 3, 4 with volatility, and then 5 to the upside. Now, it may not be that quick at the end, but I think we're going to get a good solid rally through that flag, through the 5-wave formation, nearing the end of the anomaly phase, right around December, call it 13th through 20th. I think we're going to get a good solid rally phase in the market. And this is where your opportunity is for the next big move. In the meantime, you want to trade very small moves and realize that we're looking at a downward type of an event, potentially leading to some kind of a breakdown in certain sectors. I talked about that yesterday. Now, there's been some talk about the global credit market and what the dollar and the Fed are doing. So the Fed is lowering interest rates, but the new President Trump, pending President Trump, let's say, or President elect, is sending the markets into a bit of a very strong rally stage. I mean, the dollar has skyrocketed up to almost 106 now, probably above 106 in trading this morning. We were trading down in the 101 area just a few months ago, and maybe not even 6-7 weeks ago. This is a huge move to the upside, and that's what's putting pressure on metals, and it's also putting pressure on global markets. Remember, a lot of the world operates off of the US dollar, and I was reading articles about Japan and others potentially having to spend billions of dollars trying to protect their currency and their markets against risk related to a super strong US economy. Now, I've mentioned something about this months ago, calling it the predatory Fed, that the Fed would dope walk us in a way. And that means that, inadvertently trying to do the right thing, but in the same point in time, setting up a catalyst event that is unavoidable. And I think that's playing out excessively well. I hate to say it, but I think it's playing out excessively well where the dollar at 106 could go to 107. This is very high for the dollar, especially at a time like we're in right now, where we just came out of a pandemic. We've got excess cash flow rolling around. We're seeing a new pending Trump presidency. Strong demand for U.S. markets and U.S. asset classes. This could set up, like I told you guys, in the anomaly event setting up in this area and maybe out into 2025, 2026, some kind of a correction event. So be aware that this very strong US dollar, US economy is in a way hurting other global economies. Strong US dollar is great for us. Don't get me wrong. It has its downsides, but and as far as foreign currency, foreign debt markets, foreign corporations loaded with what they thought would be cheap, near zero interest rate debt. Inflation could be an issue. The Fed could be trying to find the sweet spot now with Trump coming in. And to believe me, I think the Fed's going to stay above 2.5% to 3.5% going forward, meaning that we're not going to see zero interest rates for the next 3 to 4 years, at least, unless something big really disconnects. Okay, so I'm going to leave it right there. Now let's go ahead and take a look at gold and silver. So here's gold and silver. I cleaned all my charts here. I clean all my data here, so we'll start fresh. It's good sometimes to start fresh and just see what you see. Okay, so here's our gold cycle patterns. We have a nothing pattern today in trend mode. We're still bearish, as I mentioned yesterday. We're looking for this rolling pattern here from the up move down into flagging. This is the excess phase peak pattern I keep talking about. Down into consolidation. You can see it here, and then breaking down in an A, B, C mode down to this low. Okay, so we've got a very solid, and I'm going to make this all kind of a reddish color so you guys can see it. And this move, again, relative to pending President Trump or President-elect Trump having an effect on the markets, and you can see we've got the same type of pattern setting up over here in gold. Okay, so there's the same pattern. The number one, the flag, the breakdown to consolidation, very tight consolidation through here, really doesn't break down until this mode. This is our consolidation at 3. So we have the same setup here. We have the 1, we have the 2, we have the 3, we have the 4, which is our breakdown. Oop. Nope. 4, and then we have our searching for our low, 5 down here. So we are at this point searching for a low. Okay, and we look like we might be finding a bit of a low here. It's very solid, actually. I mean, if I come in here and point out this little move right here, and you can see it if you pay attention. Here's a move, a pullback, a flag. Never got below our low. Very solid. Has not gotten above our high. This would be a very solid entry. Theoretically, you would be able to take a long entry in this area with a stop level down below this area. So stop would be 25.93, entry around 26.12. You would be looking for a rally phase into consolidation and a move back up here to maybe 27.20. Maybe. This is a good early sign here that we're getting into basing. Now, we do not have that flagging setting up over here in silver yet. Silver could be lagging slightly. We have that downtrend, we have the low, we have the pullback, but we don't have that real flagging yet. So again, over here, gold and silver are looking for a base or a bottom, and they are trying to find that ultimate low. This may be it. This may be the low. If we get no more pressure, if the dollar subsides today, I would tell you that right here, 26, call it 26.25, 26.25 or higher, would be a good rally breakaway pattern confirming this potential bottom. And again, you could assume the same thing here in silver, roughly 31.20, let's call it 31.25, would be a very good breakaway rally phase for gold and silver. Remember, you'd want to have your stops down below this level. So this has to be a fairly wide stop right now, in the sense that, this is a tight little pattern as far as I'm concerned for the flagging, but you still have a risk of about 26.25 to 25.90 of about $30. If you wanted to be a little more realistic about it, you could move your stop into 26.05 maybe. So, I mean, hypothetically, you could move your stop right into this area, and you could move your stop right into this 30.50, 30.60 area. But again, that would be after a breakout. You want to kind of wait for a breakout. You can maybe start an anchor position here. Just remember that this is very early. We don't have any confirmation here. And if you know anything about the excess phase peak pattern, remember that we could roll downward and invalidate all of this potential setup just by rolling below this low. So understand that this is our low. This is the pattern that or the absolute bottom area that we're looking for, and it's got to hold above that level, that dark red level there and there, in order to attempt to rally. If it gets below that level, then we're off to seeking a new low again. But this looks promising for gold. I mean, I wouldn't go too heavily with it. And again, especially with the volatility right now, but it would become dependent on watching the dollar move down, watching the contraction move down. And what will happen to gold, as I've mentioned before, and I know some of you are taking this and jumping a little too quickly at it, but long and short of it, we've seen a very big collapse. So we've seen a 7% move. We're down almost $200, little under about $200 actually, in a down move. And what's going to happen eventually is we're going to get that base. We're going to rally up to where we started, consolidate, and then rally up here, consolidate, and then rally higher. And I'm telling you, that's eventually what is going to happen through the end of this year and into next year. That's how gold works through these kind of panic phases. So you can almost, look at this and go, well, I might as well get in. Yeah, time it. Try to time it better than buying in the downtrend. You want to try to catch that early rally phase, and then you're going to catch these nice big moves up. And this will be over a roughly a 60-day plus time frame, maybe. Big solid moves on a reflation of hedge risk. Okay. Very solid overall, in my opinion. Same thing will happen with silver. I'll come over here and draw it for you with silver, but the exact same thing will happen. We will eventually get our base bottom. We will then rally up to where we kind of started in this area, and then rally up into this area, and then beyond. And that's how the this type of panic low setup in metals works out. I would expect silver to stall around 33, and then maybe around 34.75 to 35.50, and then off to the races we go. Okay, lastly, we're going to come over here to Bitcoin, which was under a little bit of pressure, flagging out. Let me get rid of some of these and start drawing fresh so you can see what's going on. You tell me, guys. Okay, you've been following me enough to know, what do you see here? I want to make this a little broader and maybe spread this out, get the candles a little bigger. If I can, I can't. Okay, let's go to 2 hours. Okay, there we go. What do you see here? I mean, I see a pretty clean pullback and flag leading to a pullback and flag that leads me into a very clear kind of a flagging formation here setting this up, 3 yellow, and then across here, make it a little higher, 3. So I see that flag. I see that very clearly moving sideways. And then I see also the rally all the way up into this peak pullback, flagging, and failure to close above this high means that we are likely in the midst of a breakdown. If I were to estimate the breakdown level for Bitcoin here, I'd have to estimate somewhere into this area. Oops, it's supposed to be a straight line, and or this area. So given the flagging pattern, unless we're able to break and rally, then we are likely to hit this apex, break down into consolidation, and then maybe down into lower channeling back down here. Now, if we come up and do a simple count, we have A, B, C, D. We're very close to a breakout or a failure breakout right now. A, B, C, D, E. Yeah, we should be moving into extreme volatility over the next 12 to 24 hours in Bitcoin. We really want to watch this Wednesday at 1900 time frame. This should be East Coast, I believe. Let's check. Yep, New York. So that's 1900 East Coast. We're roughly 1300. So about noon today. By about noon, 1, 2, we should be clearly into this apexing pattern. And given what I'm seeing, and if we are seeing any breakdown below, let's call it 82,500, then we are in a big, broad breakdown mode. Otherwise, if we get above 90,000, let's call it 100, then we are in a new rally phase. But I expect a lot of volatility right here. And I do expect from the looks of this, with the current flag, we don't have a deep low. So, I mean, you could argue that this is a low. I mean, I could come all the way down here into 10-minute, and this is again part of the fun of having the ability to chart whatever I want. And I can come in here and say, look, here's our deep low. Here's our pull, our flag. This is a retest. We break out, we've consolidated, and now we're in that consolidation range. I can go all the way down here to 10 minutes and point out the fact that this is an inverted pattern. That's again the beauty of the excess phase peak pattern, is that you can find it everywhere. Literally, guys, it is a construct that makes up the market. So you could argue here that, we've got to get above this level here, which is again 89,900, or below this level here, which is the 85,200 level, in order to potentially move. If we were to break to the upside in this 10-minute chart, remember this is a 10-minute chart, then we would be moving into the this is our consolidation phase, and then we would be moving into the search for the ultimate high here. If we were to break downward here, we would be then continuing the downward peak here. This is an inverted pattern, meaning it's bearish. We would be continuing the downward trend, which would confirm this breakaway into the consolidation phase, which is this big topping pattern. I'm actually drawing it kind of in the wrong color because it is a bullish pattern. And breaking down, consolidating. Yep, and then this would be our breakdown. That's a bullish pattern breakdown. So we have a bullish pattern setting up here, coming down, flagging up, and we have a bearish pattern coming down here, pulling back, flagging down, and it's basically confirmed this range. You can, if you know, and again, there's videos on TradingView I've created about Fibonacci price theory, but it just hit me that what you're looking at is Fibonacci price theory. The excess phase peak pattern really plays into Fibonacci price theory of establishing ultimate, unique, and standout ranges, determining price high and lows, indicating that price is always attempting to establish new highs and new lows. And at this point in time, we're seeing price consolidate into a flagging sideways formation. So this is a really great example of flagging sideways within a range and how the excess phase peak pattern aligns perfectly with Fibonacci price theory. And I could probably go on for days about that. But I promise to try to do some videos about trade setups and how to look for trade setups more effectively. Remember, the first rule of trading is protect capital. So it really comes down to, and this is my belief, number one, protect capital. Number two, trade when opportunity is ripe. Number three, protect against proper risk tolerances. Number four, use the best tools to help. And I'll get to this in a minute. And number five, the way I teach it is break your trading capital into 10 slots. So the purpose behind all of this is really that if you were to trade and you understand this basic rule, you break your capital into 10 slots. So hypothetically, I have $25,000 to trade. What do I do, Brad? Well, you divide it by 10, you end up with $2,500 per slot. That means that you can take 10 trades with a 5% roughly risk on any trade and still only risk 0.5% of your total trading capital. Now, does that make sense? The whole purpose behind breaking this thing into 10 separate slots is to, number one, try to teach you how to contain risk. Number two, you can allocate multiple slots if you want into a trade. So I could take into a Bitcoin trade and allocate 2 or 3 slots if I want. But this prevents you from getting the easiest way to say it is greedy. If you get greedy and you try to bet everything, greedy equals betting everything on red or black. That's kind of the way I look at it. If you get to a point where you're betting all of your capital on either going up or going down, and you have no containment of risk, no real proper trading structure, then you're just gambling. And what you want to do, that's why I teach this. If you have the 25 grand, oh, boy, I did that wrong, didn't I? If you had 25 grand to trade and came to me and called me and say, Brad, what do I do? I would tell you exactly this: divide by 10 equals 25,000 per slot. then 10x, that gives you the ability to trade 10 individual trades with roughly a 5% risk on any trade and still only risk 0.5% total of your trading capital on any trade with a 5% risk. If you made it a 1% or a 10% risk here, you'd only be risking 1% of your total trading capital. This prevents you from getting greedy and allows you to actually trade very, very effectively. So the whole point here is as you learn and become more skilled, what did I do? Yeah, okay. This is supposed to be greedy. What did I do here? Okay, just get rid of that. This prevents you from making stupid mistakes. Pardon the term. The whole idea here is once you learn to become more skilled at this and really targeting your trades very efficiently, then you can start. You'll at that point you'll be clicking right away. You'll literally be clicking away at your trading. You won't be gambling. You'll actually have learned the skills to become a trader, but at least if you use this as a construct for your trading, giving you those 10 slots, reducing your allocation, reducing your risk, almost forcing you to learn to protect your capital from the very beginning, then guess what? You move into an environment where you're doing this by nature. The structure of this allows you to protect your capital. And as you get more skilled with it, you can become a bit more aggressive, a bit more greedy. But at first, you really do need to learn the basics if you're just trying to figure out how to trade. Okay, I don't want to go forever. Yesterday was 40 minutes. I'm going back to the SPY. So here we go. We're going to get into a good, solid trading day today. Remember, I'm expecting consolidation. I'll leave this up for now, 10-minute. I'm expecting consolidation to play out. So I would suspect that we are looking at, get rid of this. We're looking at moderate sideways consolidation today. I wouldn't expect it to be going too big, too far, too crazy today. Just I think we're going to be consolidating sideways unless we get some big news event or economic data. Okay, guys, that's it for now.